We all have an ideal client. You want to deal with clients that fit into your area of expertise so that they can feel comfortable knowing that you're the right advisor for them. Today, I want to tell you a little bit about why all of my ideal clients are called Henry.
So Trevor, what do you mean by a Henry? Obviously, you can't just be selling to people named Henry. What's the acronym here?
Yeah, of course. So the acronym is High Earners Not Rich Yet.
I look at a Henry and I'm thinking of a high earner, not rich yet. Probably a person who has 20 to 30 years left of work yet. Maybe someone who's between that age of 30, 35, 40 years old. They've been in the workforce for some time. Their income has increased. Now they're making some money that they can put away. And more than likely, if they are a high earner, then they're probably maxing out their 401ks, probably maxing out those IRAs, taking advantage of any contributions that their employer is giving them on these employee-sponsored retirement plans as well.
With that too, typically, because they're in these positions that they are earning more and they are maxing those out, they also typically have the kind of financial knowledge to know there has to be something else out there for me. They're looking for things to save more, to help their money grow, and it makes that conversation a little bit easier.
And so many folks don't realize that life insurance can be that option for them. So when we're talking about life insurance for a Henry client, why is Index Universal Life a good option for someone in this position?
There's not those limits like you have on other retirement vehicles. You know, IRAs have a cap that you can put in every year. You can set up an IUL to max fund it, and then if you want to put more in, you can get another one. The next would be taking advantage of market gains while also protecting their principal from a downside scenario. We've covered this before, actually. If you're interested in finding more about that, you can check out our link to that video here. It also has a built-in death benefit. Living benefits are built into IULs as well. And then also the way you draw income from these policies are really a big advantage too. It's potential tax-free income.
Let's go back to a couple of those benefits. You're taking advantage of market gains in these products, right? Your clients are Henrys. They want their money to grow in the market. That's why annuities are more considered to be a product for senior clients, while a product like Index Universal Life creates that death benefit, right? It lets you take advantage of those market gains. Why is that death benefit important? Well, these are Henrys. These are people 30s, 40s, maybe early 40s. They're raising a family. They have a lot that they need to insure. So here you can create for them kind of a retirement savings vehicle that takes advantage of market gains, has a death benefit should something bad happen, and hey, there's even living benefits down the road for them when they get a little bit older too. You mentioned at the very end there, Trevor, tax-free income. Tax-free income, retirement income. Can you go a little bit more into that tax-free income that they can take advantage of with Index Universal Life plans?
Tax-free income is essentially taking a loan on the death benefit of the policy. It's an acceleration of the death benefit through a policy loan. Because of that, the death benefit is typically tax-free, and you're taking that loan from the death benefit, so that income is also tax-free since it's going to be paid back from the death benefit when the insured passes away.
It's so important to decipher that you are truly meaning tax-free retirement income for your client. You're really diversifying their portfolio. A lot of people forget that you are putting money into a 401k or an IRA, whatever your company offers, whether it's a SEP or a simple plan, that money is tax deferred. It's growing tax deferred. It's taking advantage of compound interest tax deferred. But Uncle Sam is going to want his money come tax time. When you want those distributions from the plan come retirement, you are going to have to pay taxes on that. And let's think about something. Will taxes be higher in the future or lower in the future? Most people are thinking they're going to be higher, right? So if you're thinking taxes are going to be higher, you're sucking all this money away into a tax-deferred vehicle, you're going to pay higher taxes on that money than you do right now. So what can you do for a tax-free option? That's where index life insurance is really tough to beat.
Yeah, and you know, some of the cool things that we have access to and help agents with is we have a software that actually compares that side by side. So you can say, if I were to put this money in an IRA and put it in a tax deferred account, what would the actual value be if I start taking income at 63? right, or 65. And then you can compare that to an IUL as well with that tax-free income. And it shows a side-by-side comparison on the actual value.
So a lot of folks hear that word loan, right? And it makes them nervous right away. Like, I'm taking loans, so I have to apply for these loans. So I have to pay these loans back. Can you explain a little bit how that works as far as the policy loans within these index universal life plans?
The loans are pretty easy when you compare them to something like a traditional loan from a bank, right? There's no application process for a loan on an IUL. There's no qualifying for it. It's as simple as calling the carrier, calling your agent, letting them know you want to take a loan out, or you could even turn on systematic loans to start actually drawing a monthly income from those as well. As I mentioned before, they're paid back. You can pay them back. There is an interest rate and all that, or they are paid back from the death benefit as well when you pass away.
So many features to these index universal life plans. We've done the 5 benefits of IUL video before, where we've talked about, the living benefits that you can get with it, the fact that you're socking money away and you're not restricted by plans like IRAs, like 401ks, the fact that you have that death benefit. If you're to pass away, there's going to be a death benefit there, tax-free. But I think that big feature that Henry's in particular are looking for will really be that tax-free income. Hey, supplement your retirement. You can think of it in multiple income streams, almost like a side hustle, if you will. You have your Social Security dollars at retirement. You have whatever money's coming from a 401k, IRA, your emergency savings. Add IULs into that mix, make a part of that tax-free income.
Having a target market is a great way to maximize your IUL sales quickly. If you have any thoughts on Henry's or would like to share your target markets, your favorite ones, do that in the comments below. We'd love to hear from you. Of course, as always, don't forget to hit that like button and subscribe so you don't miss out on any of our sales ideas moving forward.